Howdy folks, Sunday afternoon. I'm going to go through a couple of the instruments we're trading. Let's start with natural gas, and if you didn't catch this on Friday, I'll just recap it right now. In fact, I'll link that video right now at the top of this one and at the end of this video. But we went short on a couple of occasions. We hedged it over there. We closed the hedge for profit up there. We went short again, took the whole lot off for profit at the bottom. We then went long and closed that long position for about 1 cent profit a few hours later. And we're now flat, square, in cash. We have no positions on natural gas, waiting for this weekend to roll over. Now, there are some weather reports for fairly inclement weather in the Gulf states to the south, and that may affect natural gas in one of two ways. We may get a supply destruction, or we may get demand destruction. Depends on how the storm affects different routes and so on. But we'll have to see how that goes. So partially because of that storm weather, and also because on the weekend we often get gaps, we went flat, particularly because we're at a very important support level. Now, what could happen next? We'll have to wait and see. But we are underneath all the moving averages, so angling down, and we're at a pretty high price, above $4. Anything above $4 or so, we should be looking to sell. So we're looking to short this market and resume the downward position that we've had. But we might need to get a little bounce back into some of these moving averages, perhaps back up to that swing low, slightly higher, maybe 4.2, maybe 4.3, and then a continuation of the move down. Watch this market structure break level at 4.16. We've already tested that once. That actually prompted our short position there, the rejection of the 100-period moving average. But I did cover this in some detail in the last video, which I will link at the end of this one. So generally, I'm looking for pops, rallies, small rallies on natural gas. If we get that over the weekend, perhaps with the weekend gap, I'll be looking to short those. The target for shorts is, first of all, 3.75 to 3.8, the swing low down here, and the 200-period moving average. But I think we could get below that down to 3.5, some of these lower levels, and this last swing low, there's a big gap there. And then, of course, the $3 level, the big round number, and the long-term support and resistance level. Let's switch to the day chart to have a better look at that. Best illustrated here by this rising trend line, the 200-day moving average, the purple line, and this previous swing low. $3 is a level that we bought at several times before, so we'll be looking to rinse and repeat. A return back down to the $3 level, the trend line, the 200-period moving average, a previous swing low on multiple occasions, and also a previous swing high on multiple occasions, as you can see looking across to the left. So that's our strategy on natural gas, to sell into rallies, and I'm looking forward to that next week. WTI oil, we remain short, looking for Moab to break. Once again, I did cover this in the last video. Looking for a move down to the shorter-term channel bottom, a bounce up back up to Moab, and then a resumption of the downtrend, perhaps below 50. If we zoom in a little bit, you can see where that Moab level is, and that's roughly at around $65, something like that. We're watching for a break below there. And zooming in even closer, you can see where we are today, just consolidating at that level. And you can also see all the short positions that we've taken over the last couple of years. So that's WTI. We're also long on uranium. Nothing's really changed. We'll be going sideways for a few days. Let's switch completely across to currencies. We're long on the dollar yen. Let's have a look at this on the day chart. There you go. We've got a sort of a tweezer bottom there at support, at that base, and pretty oversold. A steady downward movement. We've got a trend line, various moving averages above us. I'm looking for a mean reversion trade on this, and then a resumption of the downtrend. I'm hoping we could get up to 151.20, somewhere around there, this last swing low and the Fibonacci level, and also where the 200-period moving average is. That means we might have to just break up through that downward sloping trend line a little bit up to the 200, maybe even slightly higher, and then a resumption and the move down. My target for dollar yen, all the way down to the 140s, 120s, and 130s at some time in the future. Maybe it'll take a year, I don't know. And then we've also got a short on the euro yen, just looking for this pattern to play out, which I've covered on a couple of occasions. Slightly boring trade at the moment, but we're looking for a rejection. We did poke up through that trend line very briefly, and we actually closed above that trend line on Friday. So a little bit of a concern, although we do have a tweezer top forming there. We'll see how that plays out. As long as we're below that red line over there at about 164, I'm still happy with a short. Potentially a bear flag after a big move up. Nice flag pole formation. Bear flag underneath a falling trend line, and the measured move, considering the flagpole size, is all the way down at 144. On stocks, big bounce on Friday, of course, as everyone will have noticed by now. And just looking at the NASDAQ and the S&P very quickly, these are our two main plays at the moment, mostly on the NASDAQ. Big bounce. We got long right at the bottom a few days ago. Massive, not quite a bullish engulfing candle, but trying to approximate something like that, and bouncing up pretty nicely. We are still under the channel bottom and under the 200-period moving average. We've had a 15% sell-off, so a corrective territory was reached, very similar to what we had in July last year. Also 15% pullback, almost identical size actually. But two key differences now. We're below the channel line. On the first occasion, we didn't break the channel line, and the steep bounce back up off the bottom of the channel line was pretty impressive. On this occasion, we've got down below that channel line, the green line, and well below the 200 period moving average. On this occasion, we didn't even close beneath it, so much more bearish, even though we have a similar pattern. We have held this order block, and we've had a fairly respectable or reasonable bounce up. A spike low, well, it's more of a dragonfly doji, followed by a higher high and higher low candle, but then on Thursday, a collapse back down, Friday reversing all of that. So pretty choppy. This could be a reversal, or it could just turn out to be a bear flag. We'll have to wait and see. Nevertheless, we are long, and we have the same thing on the S&P, although this one looks slightly more optimistic, perhaps. We only dropped about 10.3% as opposed to 15% on the NASDAQ. The S&P is not as volatile, of course, but also we formed a much more interesting reversal type pattern here. We've got a one down, one up, followed by another one down, so a tri-reversal candle pattern. And then we do have a bullish engulfing candle that formed on Friday. So once again, holding that order block after a 10% correction, and perhaps with a bit of luck, after an incredibly oversold, fearful position, these markets could bounce back up a little bit. We also have a long position on Tesla. We should have chosen Nvidia, but we chose Tesla, the one that everyone loves to hate, and also holding up really well on Friday. In fact, a nice bounce up after reclaiming that red line and just holding up there on Friday. No fireworks, nothing very dramatic or exciting, but a steady hold there for Tesla. And if we can regain some of these levels slightly higher, break that trend line, get above the 200, the same goes for the NASDAQ and the S&P, then historically speaking, if we manage to retain some strength over the next few days or so, we could have quite a good year ahead of us on all of these indices, including even the German 30, which reversed dramatically on Friday. A lot of people were saying this is going to go short. It did look like it. Big reversal, one up, one down at the top here. Bearish candle, several consolidation candles down here, an inside bar on Thursday, and then Friday just bursting up back above the 20 period moving average and forming a shaven top bullish candle, which is very bullish indeed. We should continue on higher on all of these indices given the way we closed on Friday. IWM also got a pop, the small caps looking good, and we're also long on Google and Coinbase, muted bounces on those. So far, nothing very exciting. We're also long on Bitcoin, Ethereum, and XRP. These are just coming off a little bit today, but a nice big bounce on Friday. That was Friday, reclaiming the 200. Saturday, holding the 200. Sunday, that's today. This is live, just moving down a wee bit. But that's okay. We don't really want this to gap up over the weekend. We don't want a CME gap that's got to be closed to the downside. So I'd rather sort of gaps down to the downside over the weekend. Then the CME gap will be above us, which means we probably will have to gap up at the open a little bit later on today, which will be good news. So I'm not worried about the little pullback today on Bitcoin or on Ethereum or on XRP. We don't want the CME gaps below us. We'd rather have them above us. So I suppose that's good, if anything, but ideally we'd be just sort of staying at the same price, which we're not, just dropping back slightly. But we're long on all three of these, Ethereum, Bitcoin, and XRP. And we're also long on gold and silver. Now, gold reached the $3,000 level before dropping back very, very slightly on Friday. We got long just above $29.10. We got up to $3,000, and we just pulled back a wee bit on Friday. Now, the long consolidation under $3,000 makes me think that we'll push up through $3,000 more dramatically than not. And I think we could reach 3,180, 3,220, something like that on the first attempt. Same thing on silver, although we haven't got to new recent highs, let alone all-time highs on silver, but also a big move up. You can see where we got long on Thursday after breaking out through the local high. Big move up thereafter, and if gold keeps moving up, I think silver will keep going with it. And my goal or prognosis for silver is somewhere around $50. I think we could get there and perhaps even higher, maybe up to $60. We've got nothing on copper or on any of the other metals, including platinum and palladium. So we've talked about energies. We're long on URA, we're short on Brent crude, and looking to get short on natural gas. Going across to VIX, we're short from somewhere near the top. As the stock markets move up, we should see VIX carry on moving down, and we'll probably exit VIX somewhere around 15 or 16. We're also long on TLT. I'm looking to exit TLT at 92.8. And then the softs and the grains, not a lot to report. We're still short on cocoa and coffee, long on corn, long on cotton, long on orange juice, long on wheat, long on soya, and long on sugar. And that's it, folks. Just to remind you, on Wednesday, I've got a free webinar coming up on natural gas. It's free. And there's a link below this video to sign up for that webinar. Just make sure you put your name on the list. There are limited places, and I think a lot of people are interested. And if you don't want to attend that, at least subscribe to this channel and give the video a thumbs up. I'll see you in the next one. Take care.
Oi, what's this? Bitcoin took a dive, flushed them longs, markets alive. Wicked wick down, traders in shock, then it banged back up. Proper TikTok, big spike down, then a Bitcoin bounce. Market went mad, short lads pounced, dip quick, then it ripped up fast. Leverage got wrecked, better hold on, bruv, blast. Feds got beef, traders all stressing, rate cuts, nah.